All right. Thank you. Wow, bright lights. Well, thank you, Nelson.
Wow, yeah.
Thank you, Nelson. We've been talking about doing this for a while, so I'm so excited to finally have you up here. Let's start with big picture. And Trian actually just celebrated at the end of last year its 20-year anniversary, so a big milestone. And you've obviously seen a lot over your career. I think some 40 engagements with companies, 20 boards, just 4 proxy fights during that time. How has the activism landscape evolved during those 20 years?
You know, I don't like the word activism. Let's start right there.
Right.
No, I think in our case, it's constructivism. Mm-hmm. And I don't say that with tongue in cheek. You know, we don't go into these companies to fire people. We don't go into these companies to leverage them up and buy back stock. You know, if your solution is only a balance sheet solution, then you don't need us there. You just call your local investment banker and he can tell you how to change your balance sheet around. What our goal here always is trying to figure out how to get sales up much faster than they had historically, had earnings to go along with it, and have them look at new ancillary avenues for them to do that. I mean, I think some of the bigger names we're involved with was P&G, which was the largest proxy fight ever, and ended beautifully. Nobody got fired. You know, we got on the board, peace broke out immediately. It was unnecessary to have that proxy fight. And the stock went from the 70s to, 160. So we were happy, and I think anybody else was happy. And we didn't do it by hiving off businesses, and we didn't do it by leveraging the balance sheet. We just got sales up, and profits went along with it. And we changed some things structurally in the company. And that's our goal all the time. These are not personal issues.
Mm-hmm. To kind of follow up and build on that, and I know you don't like the word activism, and we did a story, I believe it was late last year, on this idea that the idea of the big name activist is that era is over and behind us. And I think part of the thinking was folks like Bill Ackman and Dan Loeb and maybe even yourself, but just aren't running as many proxy fights, and there were a lot more settlements, and it feels like we'd been trending in that direction. So do you think, as you think about the future of the industry, I guess, and this evolution, where do you think we are today, and what do firms look like in the future? And maybe we're seeing less and less of those big names.
You know, the roots of Trian is not proxy fights and not activists. It's buying whole companies. Mm-hmm. And that's what we did very well in the 80s and the 90s with American National Can and Snapple and a whole bunch of others like that. And we did that without a fund because a fund sort of restricted us. It didn't allow us to buy a block of stock and interact with management, which is what we did with Janus Henderson.
Right.
We bought 20%, made a bid for the company, partnered with Hermant, your previous guest here, and he brings a whole new view on the world. Everybody's talking about AI, but I really wonder how many people are really doing it. And with Hermant, I think we're going to really be able to apply AI to asset management in a very meaningful way. So I think that you'll be seeing Trian going back to our roots a bit. Now that private equity has sort of fallen on its face, it's not very popular. And we always had a saying at Trian, we want to buy what we want to buy, when we want to buy it, at a price that makes sense to us, and not one where somebody sent us a blue book from Wall Street to put a bid in on this deal that just came out. I mean, that's not the way we do it.
Right.
We invest because we have a plan.
And you invested in Janus during the pandemic for 5 years ago,
we invested
right?
in Janus, three and a half years ago.
Yeah.
We bought the stock about 2021. We just agreed to buy the rest at $49. And think of it, the price we're paying today is almost the same multiple as we paid in the low 20s. So that says the company did a couple things right. We put 2 of our partners on the board. We brought in a new CEO in Ali, who was just an absolute star. And he turned that company around. He turned outflows into inflows. And the company started to grow. And we thought there were more things we could do as a private company than a public company. And then we got Hermant to come in and do stuff a little differently than what he's accustomed to, but he's added so much to our plan because everybody's talking about AI. Everybody thinks they're doing it a little bit, and everybody is doing it a little bit, but it really has a major application. And with Hermant, I think we're going to be able to really use it so well and so efficiently at this company and hopefully others that we might do.
And you've referred to it, at least to me in our conversations, as a Trian 2.0 and kind of this new era that you all are entering, and possibly the potential to do more deals like this deal with Janus and maybe with other investors like General Catalyst, and obviously building on the General Catalyst.
You're right. Look, it may not be 2.0, it might be, 0.5. We used to buy all of a company. I like doing that. I don't have to, do a dance for a boardroom. We can start to put in what we'd like to do and get done rather quickly. So I like the idea that private equity is sort of shut down. Prices become more reasonable. Deals become more productive. So we can do things the way we'd like to do it. And I think this is a market that's sort of coming our way. And
going back to AI, which again, Hermant just touched on a bit earlier with Miriam, but from an investing standpoint, do you think there's a bubble? Do you view it as risky? Like as an investor, would you put money in now, or how are you thinking about kind of the AI trade?
Look, I think with every major breakthrough, and AI clearly maybe as important as the cotton gin. I mean, that's what I'm being told anyway. And who am I to dispute that? There's going to be some pain. There's going to be a rough period. But the companies that come out of it and the societies that come out of it are going to be way better off. So, I don't know if there are any lawyers in the room, but
maybe a few.
But you guys have been impacted, by AI, which, not being a lawyer, I'm sort of happy about. I know who to ask a question to, and I get a pretty good answer. And what's fascinating is the only person who's less technological than me is my wife. And she's talking to AI all the time. And it's amazing. I mean, really amazing to see the way this thing is being used, not just by businesses, but the public. They're really using this stuff. And it's going to make us so much more efficient. It's going to, unfortunately, we're going to have a bump in the road with a lot of employees are going to be displaced. And we've got to figure out how to negotiate through that. But the worst thing we can do is have government put the brakes on it. That's something I worry about, that they slow it down because of this fear of unemployment. And we have such a leadership position versus the rest of the world today. I don't want to see us fall behind because of that. We've got to figure out a way around that. But look, it's progress, and it's amazing progress today. For an old guy, for me, it's really amazing.
But you were telling me earlier, you've been doing AI before AI.
Oh, absolutely.
Even existed.
I named it.
Yeah, exactly. Well, kind of related, but the current administration and President Trump, that seems to be something that's very top of mind for himself. And you've got others like Elon Musk who are also very focused on it. And he just announced a big deal merging SpaceX and XAI. But you have relationships with folks like this, and Trump and Musk and others in the administration. How do you feel about the impact that generally Trump and this administration has had on the market, and agree or disagree with a lot of where things are going?
We don't have enough time, okay? But
that's true.
I like everything else. I like a lot of things that Trump has done, and I disagree with some things that he's done. I think he's using tariffs the wrong way. I was hoping, and I think Elon the same, was hoping that the threat of tariffs were going to lower tariffs, so we had closer to free trade with us and our trading partners, and not being used as a source of revenue. Okay, and it seems to be coming that way. The story's not over yet, so I'm hoping that it does that. It lowers the trading barriers, which is the right thing, because we can compete in most areas. I mean, a Chevy shouldn't cost 150 grand in Germany. It should not, where a Volkswagen is just, a normally priced vehicle here. That's what I thought was going to happen. And instead, we're making a lot of money on the Volkswagens coming in here. And I'm just hoping that's temporary. But for the most part, I think what Trump has done and is doing, I tend to agree with.
Another big, I guess, news item this morning is Disney just named its new CEO. And I've been following the Paramount situation with Warner and Netflix. And so just generally, there's a lot going on in media. And Disney, obviously, you guys were
I don't know anything about that.
No, I haven't been following that one. But a big point of your campaign was succession planning, and Disney has had starts and stops along the way in finding its new leader to replace Iger. And I wonder if you think Josh DeMuro is the guy.
Well, I didn't think there was any choice, okay? Because Iger needs a reason to stay on. And if he put the person in charge of entertainment as the CEO, he wouldn't have an excuse to stay on. So now he's got poor Josh, who you'll find the statement, Josh doesn't know anything about the movie business, the entertainment. Therefore, I'm going to stay on and guide him. Watch that, folks. Okay? See if I'm wrong. Okay?
We'll see. Yeah. Investors.
Bob has done that a couple of times.
Yeah.
And we sold our stock the day the proxy fight was over at 119. That's not quite 2 years ago. The stock was about 105 yesterday.
Right.
Okay, the market, if it had just kept pace with the market, the stock would be a shade under 200. So that's what happened when you beat us in a proxy fight. Okay, you gave away about 90 points. Okay, and I say that humbly because we had a very good plan for Disney. It wasn't a balance sheet plan. It wasn't leveraging up. It wasn't buying back stock. It was creating real momentum to the operating businesses. And I'll tell you this, it was interesting. We had one meeting with management and the board, only one in-person meeting. And when they brought management in, and this is a very telltale sign after you've done this as many times as we have, the management they brought in the room, they brought in about 8, 9 people. There was not one person in that room who had a P&L responsibility. All staff jobs, okay? That's not the way you run a railroad, okay? It's the men and women who creating sales and EBIT are the people you want to talk to, and you want to let them do their job and get out of the way, get all the clutter out of the way, and if they do a good job, promote them, pay them more, and if not, give them another job. But that confirmed everything that I felt about Disney at that point. Everybody was a staff job who came in the room.
He's got his work cut out for him.
That he sure does.
Time will tell.
And I hope he's given the opportunity to do it.
Yeah. And during that fight, or during that campaign, and just like any proxy fight nowadays, the role of the idea of shareholder democracy, the role of proxy advisors, which is ISS and Glass Lewis, continues to be a big kind of debate, a point of conversation. And you had Jamie Dimon come out and say JP Morgan is getting away with them and using AI instead to replace these proxy advisors. And just, I'm curious your thoughts on the role that these kind of...
Look, the proxy advisors, in my opinion, not the issue. Certainly most of them liked us, okay? What I think the real issue is the index funds. And they are the only shareholder who really doesn't care if the stock goes up or down. And that's a problem because they're the biggest shareholders. Okay, I want to talk to a man or woman who cares if it goes up or has got a short on the stock. I know where they stand, and my goal is to interact with them. But when the biggest shareholders, who own roughly 25% of most companies today, are the index funds who don't care if that stock goes up or down, and that 25% becomes 30, 35% because everybody doesn't vote, but they do. Okay? So they really swing the cat around the room, and they don't have a dog in the hunt. Okay? And that's got to change. And I know there's talk of legislation,
right.
and boy, I hope they pass it. Okay? Because I want to talk to the people who care if the stock goes up or care if it goes down. Those are the people I care about, not the man or woman who just owns the stock and he's getting a fee, whether it goes up or down, doesn't make a difference.
Yeah, no, that'll be an interesting one to watch. And I know we're running out of time. One more thing I'd be remiss not to ask you. So I know you have tons of experience negotiating high-stakes situations, particularly playing out in public view, and particularly with your family. Your daughter recently has been...
Had my family been in the press lately? I haven't noticed that at all.
But I just wonder, from your perspective, if you've been able to... You offer your family any advice on how to navigate such situations?
I do. I do.
It's good advice to get.
Sometimes they give me advice. Yeah. My advice is stay the hell out of the press. I mean, so how much good did that do? But, that my daughter and the Beckhams are a whole other story, and that's not for coverage here today. But I'll tell you, my daughter is great. My son-in-law, Brooklyn, is great, and I look forward to them having a long, happy marriage together. And
she's got another movie on the way.
Yeah,
right? I don't know if I can say that, but yeah. I watched the first one, so I'll have to keep an eye out for that.
I will.
Well, Nelson, I could do this all day. You're awesome, and thanks for joining us again. Thank you for the audience sitting through this, and we got a wrap now. And I believe after this, we actually have a 20-minute break, so good opportunity for you guys to grab a cup of